What is divorce lending? Guys, today we have John Marroni. He is a certified divorce lender, and we're gonna chat with him a little bit today, figure out what it really is, because me personally, I'm fresh into this, learning about divorce lending. I guess I'll give it away to John. Here, John.
Thanks, Javier.
Yeah, you're welcome.
Just a little bit background on myself. My name is John Marroni. I've been in the mortgage business, writing loans for 27 years. Prior to that, I was actually an engineer for 8 years. And when I left engineering, got into mortgages, I was blown away how the mortgage industry took something so simple as lending money and complicating the heck out of it. I'm like, it's simple. They just want to borrow money and pay it. So I've always taken a simplistic approach. So over the years, as I'm doing the mortgages and all that, I realized there's an area that didn't really get a hard look at it, and that is divorce lending or divorce mortgage planning. So 3 years ago, I got my certification on divorce lending professional. And so what a divorce mortgage planner does is takes a holistic approach of the whole divorce process. It's like an intersection between the family law attorney, financial and tax planner, the property itself, and then the mortgage. And you take a look at, the property disposition, whether someone wants to stay in the home, do they want to do an equity buyout, capital gains tax, you take a look at the whole thing where it's put all together. So what I always encourage for the divorce attorneys, I encourage for them to have me get into the process right at the beginning, where the folks can help strategize and with the negotiation, because there's 4 phases for the divorce mortgage planning. First is the house itself. You vet the house. You could have one of the couples that may not be on title. That's going to affect on what you can do for the mortgage. You may have to delay the process. And the other portion is, let's say they have a plan, but now they got to see if someone can qualify. Then you get into the qualifying income, which we'll get into different strategies on how to qualify for the mortgage itself. Debt, how they handling the debt, who's going to pay for that. Mm-hmm. Things that you can do that we don't have to include debt for the mortgage to get for qualifying purpose. Okay. And then of course, the home equity solutions as well, the timing of selling the house, maybe try to minimize your capital gain. So that's it in a nutshell. So we can, I'll go into a little more detail of a couple of scenarios that I recently done that actually was beneficial.
Sweet.
Yeah.
Okay.
So I had a couple.
Yeah, walk us through part of the process.
All right. So I had a couple, they instinctively, they said, we're getting divorced, we're going to sell everything. Okay. Well, they happen to have they had a second home in Plymouth, and they're going to sell it, and they're going to pay all this capital gain. Okay. And the husband was moving out, and I said, you work in Boston. Why don't you live in the home in Plymouth for 2 years as your primary resident? You will minimize your capital gains tax when you sell it. That's exactly what they did. They saved a ton of money by waiting and not selling right away. So that was that's one example. Another is in terms of, say, qualifying income. I had a situation where, in terms of the alimony, so what happens is, let's say, for example, the court order says you're going to give alimony of, say, $10,000 a month. Typically, we have to wait, 6 months of receiving of the alimony, and then we can start using the income. Okay. So sometimes I'll use the case of the husband is going to be paying the alimony. Sometimes the husband says, I just want to just give a lump sum. I don't want to, we'll come to that agreement, and then that's it. Well, if the wife wasn't working and then she wanted to buy a house or refinance, typically there would be no income in that case. There would be a lump sum, but there would be no income. And I had a situation like that where the husband gave her $500,000. So how we solved that problem was we took the $500,000 and we set it in an irrevocable trust. Created a trust, very simple. And as long as we can demonstrate that the income they're going to receive will continue for 3 years, we're able to use that income. So there was $500,000. We said, all right, we're going to $10,000 was plenty to get her to qualify. So we had the trustee write a letter saying we're going to have a distribution of $10,000 a month. We only needed to show one distribution, and we're able to use that $10,000 for qualifying income.
Wow, that's very creative.
Oh yeah, that was awesome. Wow. I had another situation where typically when, let's say the husband, I'm going to keep using the husband, it's easier. All right. Let's say the husband's moving out and there's a mortgage. Let's say right now the rates being so high, let's say they refinanced a couple of years ago or even last year, and their rates are in the twos, they don't want to give that up, and they're both on the mortgage. What do? Well, you do a couple things. One is it's very important as to the verbiage in the divorce decree. And if it specifically spells that property, the mortgage is the wife is responsible for paying the mortgage.
Okay.
Even though the husband's still on the mortgage. In our world, we don't have to debt the husband for the mortgage as long as it's specifically spelt out.
Okay.
The only risk the husband would take in that case is if the mortgage is not paid on time. There is another alternative.
So that's a problem for him. If the mortgage isn't paid on time, then it falls on him.
Because it's still on the credit report.
Okay.
And it's the same thing for other debt as well. Whether it's credit cards, as long as they spell it out. So let's say I've had clients come to me, after the divorce decree was all stamped off by the judge, and they're like, oh, we didn't do that. What do we do? I said, all right, this is what we're going to do. You're going to set up a separate checking account for your wife, and mortgage payments are going to come out of her account. So as long as you get 12 months in a row, if it's coming out of her account,
okay.
After 12 months, I no longer have to debt you for the mortgage.
Oh, wow.
Yeah. So, and what I do on that thought alone, even if someone's not getting divorced, this is a nice little trick here. I do that with parents that sign children's student loans. They're co-signed.
Yeah, they're co-signers. Yeah.
So what I tell them is have to open up a separate checking account with just the child. Don't make it joint. It's got to be the child's account alone, and as long as and make the student loan payments out of that account, you do that for 12 months, I no longer have to debt you for the student loan, the parent. You do that for auto loans as well. Nice little trick.
You can do that for auto loans and student
absolutely loans. Yeah. The key is both.
That's really cool.
It is.
Yeah.
So the key is both the child and the parent have to be on the note or both on the car loan. So it's not like I'll have situations where the parents say, oh yeah, that's I bought the car for them, but they only took out the loan but only put their name on it. Doesn't count.
It's not applicable.
Nope. They have to have they have to both be on the account, but the payment's got to come out of the child account 12 months that I no longer have to debt them for.
Interesting.
Yeah.
So I think I'm going to introduce you with a question that I think most of the viewers are thinking about right now.
Yeah.
Especially ones that are going to go through a divorce or going through a divorce. So say I'm a new client. I come in, I say, hey, John, I'm getting a divorce with my wife. What would you walk me through? So what is a process that you would take me through to prepare myself? Because
sure.
From what I understand is you're not just the lender, you're a planner. So you plan from start to finish, yeah?
Yeah. So basically I got this nice sheet. It's a journey of divorce and homeowner. So really it starts...
Let me pull the sheet.
Yeah.
So you guys can see it. You guys can freeze the frame. I'll put that right there. Okay, guys?
So like step one, it's wants and needs. It's like self-reflection.
Mm-hmm.
It's like, what do you want? Are there children involved? How old are the children? Are they in high school? Do you want them to finish up their high school in that same high school?
Mm-hmm.
We don't want to leave the town or anything like that. So that's like the first thing. You need to decide. It all comes down to what your needs are and what you want to do. Once you get that, then it's like, okay, now we know what we're going to do with the house. So
okay.
There may be, I have a couple right now that they said she wants to keep the house. He's still on the mortgage, but they don't want to refinance. And I said, all right, that's fine, but just put, in the stipulation that when the rates get down to, say 4.5,
mm-hmm.
She's willing to refinance, something like that.
Okay.
I had a situation where they were going through the divorce and they were going to refinance, and the only way they could qualify was for him to be on it. And he said, and I told him that, and I said, he goes, yeah, but that's okay, because we're going to be saving $700 a month, and that's going to help during the negotiation of the settlement.
Gotcha.
In terms of the spousal support. Because
so some for some.
Yeah,
okay.
I'll co-sign. We'll free up $700, but I'll split that, so my spousal support will be $350 less than I was normally going to pay.
Gotcha.
So things like that. That's why it's so important to, in that case, to get involved before the settlement, because you kind of, when you take a look to see what options are available. In that case, I was able to upfront and refinance down.
So ideally, I interrupted you. I'm sorry.
No, it's okay.
But ideally, so you would like to, or in essence, it's better for you to work with the attorney as well. So all three of you in conjunction. So it'll be like a circle of working together. Yeah. Yeah.
So let me give you a perfect example.
Okay.
So let's say they decide she wants to keep the house and she's going to buy them out. But let's say she's not on the title.
Ooh.
Yeah.
That's
okay. So we get some options. So option number one is, all right, we're going to do a cash out refinance. But in order to do that, we got to put her on the title, do a quit claim deed, get her on the title, show ownership for 6 months. then they could do the refinance. Another option is rate and term. Basically, it's not considered the cash out. It's considered an equity buyout where, the wife would not get any money, but all the money would just go to the husband.
Okay.
You do the quick claim deed, but you'd have to wait 12 months.
Okay, so that's longer.
Yeah.
But
and there's one more option.
One more? Okay.
Before the divorce, before anything, the wife buys the house off the husband. The down payment will be a gift of equity from the husband to the wife. So
Okay.
So let's say he says, I want $600,000 and the house is worth $1 million. Fine, we're writing it up. $1 million purchase price. She takes out a $600,000 loan. Proceeds go to him. $400,000 gift of equity. The only thing on that case, is the tax stamps of, the 0.0045. So it'd be like, what, $45,000. So maybe they can negotiate there. But if the husband wants the money right away, I always find when you give money right away, things get flexible real fast.
Easier.
Yeah. So that's vetting the house. So with that, you got 3 options. Whereas if they already sealed the agreement, then the idea of purchasing the house is off the table. So now you got to wait.
You got to structure it better.
Yeah.
Okay.
Now you had a question. I think I may have.
No, I mean, maybe I did, but you just took me on a whole journey and I was following you the whole way. So it was really fun to hear that.
Yeah, no, absolutely. And then, of course, that's, then let's say someone's going to refinance it, right? She says, we're going to keep it, we're going to refinance it.
Mm-hmm.
And then you say, and by doing that, they're going to say, all right, what's the value of the house? Well, let's get a realtor. And when you say, well, no, the realtor's going to say how much you can get. That price is going to be a lot more than if we get a bank appraiser. Yeah. So a bank appraiser is going to come in and appraise it for, what homes that are similar have recently sold. Mm-hmm. A realtor will do a CMA and what they can get. Both are correct, but it's just 2 different perceptions on that. So you need to come to terms with that and agree upon what they think the value is. And then from that, come up with an agreement in terms of like a buyout settlement. Okay. How's that works?
That's awesome.
Yeah.
So I also want to note here.
Yes.
I want to ask you. So you can work as well. So other lenders, they can do this as well.
Of course they can.
But what is the difference between you and a regular lender?
Well, we all have the same tools in the toolbox. It's just a matter of what's the difference between one carpenter and a craftsman. Okay. We all get the same tools. It's just know how to use it. I've been, I think my years of experience, you tend to learn different ways to be creative. Mm-hmm. Some folks never learn.
Some folks never learn.
And it's
and you're also certified though.
I am certified.
You're a certified divorce lender.
I am. And
what is that certification called?
Yeah, it's CDLP, Certified Divorce Lending Professional.
Wow.
And always, because fellow CDLPs were always like brainstorming, having masterminds, and people always come up with new scenarios. Mm-hmm. I'm been doing this 27 years. I'm still learning things. Every time I think I've seen everything, something else comes up. It's just the way it is. Yeah. Constantly.
Being a realtor, there's nothing I haven't seen, but at the same time, I always learn something new every day, which is kind of like counterproductive, like counterintuitive. What I just said, but like, as a realtor, I know stuff, just like you know stuff as a lender, but then you're just like, whoa, I didn't see that. That got me from left field, Oh, absolutely. Yeah. And then the truth of the matter is, when you take a step back, there's life after divorce. It's really, and so the whole thing is to set both the divorcing couple in the best light possible, knowing the fact that there's children involved. Divorce is hard. There's no question about it. But you try to. My job is at least make the finance part as easy and seamless as possible. Because a lot of times these things are driven by pure emotion, and you got to kind of let them know the facts and the options. Yeah. And what works best for them. Yeah, it is a very difficult time. It's a marriage. It's a divorce. Yes. And people need some guidance and direction, and you do this all the time. Absolutely. Yeah. All right. So that's wonderful. What are common questions and misconceptions that people usually have about divorce lending?
Well, they probably just assume it's just divvying up the assets, and I think the misconception is not really looking at the options like the tax ramifications and what have you. I'll tell you, a trend that's coming right now is the senior divorce, the gray divorce is what they call it. Since the 1990s, that divorce rate has tripled. Really? Yes. Holy. So, yeah. And so then there's different options for them. For those folks, you might want to think about like reverse mortgages. And that's a lot more emotional because as they're older, they don't have as much time to recoup any losses that they may have, from the divorce. Another fun fact is folks under 40, that divorce rate has dropped in half. So I don't know if people getting married later and taking a harder look at each other, deciding to hold off on marriage.
Well, it's sad on one side and then kind of promising on the other side, right?
Yeah, exactly.
Okay,
you know,
wonderful.
I would say, and there are other things to look at too. When people are going for like a settlement, they have this, let's say someone has like a 401k or whatever, and people say, well, how do we split the 401k? Well, there's this thing called a QUADRO. It's a qualified divorce domestic relation order, and which allows.
Wow, it's a mouthful.
Yeah, it is. A little tongue twister there.
Tongue twister right there.
Yeah, it allows. The order allows for the other spouse to get a certain percentage of the 401k, whatever they agree upon, without paying any penalties or tax ramification.
Oh.
Yeah, they just take it and they create another account with another retirement account.
I didn't even think about that because whenever I think about 401k, I think of like tax implications of 401k.
Yeah. Like
ever touching it, you know?
That's right.
Okay.
So, and I would say, again, like the biggest on my end, it's me getting together with all the other professionals involved in the divorce process. Again, for the the financial planner, tax attorney, tax ramifications, the family law attorney, for putting together the divorce decree with the proper verbiage. Because we all have our own perspective on how we look at things.
Yes.
So. Yes. Excuse me. So you might have, whether it's a mediator or a divorce attorney, they're just going to say, all right, you guys, this is what you guys want. All right, we're all agreed. But they're not really going to come at it in terms of the financial end, what type of tax ramifications may be.
Wow.
So.
Okay.
Yeah.
So any final thoughts or contributions you want to say before we say goodbye to the viewers here? I would just say, the only thing I would say is, if you're contemplating a divorce and you want to, I can actually pre-approve you for, for different options. The only thing I will caution you is if you're going to do that, make sure, like if you tell me to go pull a credit report, they have these things called trigger leads where these other lenders will buy the lead from the credit report company because they know that person's shopping for a mortgage. And the Attorney General says that's a good thing, competition, which is fine. But what happens sometimes is they might have a phone number on file and the other spouse picks up the phone, not even know the person's thinking of refinancing. Yeah, that's a sticky situation.
Yeah. So just beware. So usually I'll ask them, does your spouse know we're going to do this? They'll say no. I said, all right, I won't pull a credit. I'll just make some assumptions. What do you think your credit is? Or maybe have them do like a credit karma. Because if he does that, that's not going to be a trigger lead. So then I can make some assumptions there based on what I see, credit score or whatever. So that could be a real problem.
That's a good thing to note too, because I never thought of that.
Yeah.
Oh man.
Yeah. Can you imagine that the spouse has no idea that the other one's thinking of ending the marriage?
That's tough.
Yeah, it is. Wow. It is. But it's like I said, divorce is tough. So I totally get it, and I try to do my part and just at least on the finance end of things, try to make that smooth and set both divorce couples up for a successful post-divorce as much as you can.
All right.
Simple as that.
Well, guys, this is Javier Hurtado Realty. If you guys have any questions for John or you want to comment and ask questions, my links are below and you can comment below. And John, thank you again for coming today.
You got it. All right, thanks for having me.
We'll catch you guys later.
All right.